It's time for the Market Pulse update for the week of September 12th, 2022. I am Jordan Dove, your host with the most real estate knowledge. I'm a realtor in Las Vegas, Nevada. If you have any questions, if you need a real estate agent or you need a referral for a real estate pro in your area, feel free to visit my website at jordandove.com and get my contact information and give me a call, shoot me an email, send me a text, whatever is easiest for you. Okay, so moving into the national market update segment of the show today, our first topic is the hottest housing markets. Yes, there are still some hot markets, although prices are beginning to level off nationwide, and the hot markets are in terms of housing affordability. We know that housing affordability is very expensive. It is actually a crisis, and that includes purchasing, that includes rents. It is difficult to afford homes when they take up 50 to 75% of your total monthly income. But anyway, these are markets that are the most affordable in the country right now, and taking that top spot is Manchester, Nashua, New Hampshire for the month of August, which is holding the top spot for the 10th time in the last 12 months. Manchester, Nashua had a median listing price of $483,000 with a median days on market of 27. They averaged 3.2 more viewers per property versus the United States average. The top 20 hottest markets are spread out across 13 states, with 3 metros being in Indiana. And I'm going to put a chart up on the screen so you guys can see what those top 20 hottest markets are. Do you live in one of those markets or near one? Let me know what's happening in your market in the comments. As prices begin to level off nationwide, affordability remains a key feature of August's hottest markets, with 16 markets below the national median listing price. There are no Western region markets on this month's list again, and that is for the third month in a row. The Milwaukee, Wisconsin metro area saw its largest increase in its hotness ranking among larger metros compared to last year, climbing 128 spots to rank as the 40th hottest market in August. Moving into new home sales and new homes and new construction, they slipped to their slowest pace since January 2016. New single-family home sales declined 12.6% to 511,000 units in July from a pace of 585,000 units in June, and were down 29.6% year over year. The inventory of homes for sale has risen. The listed inventory of new homes for sale at 464,000 units for the end of July increased 3.1% month over month and 28.2% year over year. That inventory would support 10.8 months of sales at the current sales pace. That is up from 9.2 months in June. Talking about mortgages, forbearance on mortgage loans continued to decline. The MBA, which is the Mortgage Bankers Association, their forbearance survey showed the share of homeowners with mortgages in forbearance was 0.74%, or 370,000 households in July, down from 3.4% 1 year ago. The forbearance rate was only 0.25% of all home loans in the beginning of March 2020, before the economic effects to the COVID pandemic began to be felt. The second quarter in the United States, home ownership rate rose. The national homeownership rate increased to 65.8% in the second quarter of 2022 from 65.4% in the first quarter. But there is some caution when you're using and comparing this rate to the 2021 second quarter estimate, because COVID-19 prevented normal data collection procedures during that time. The historic norm since 1965 is 65.2% according to the U.S. Census Bureau. Now, before we get into the Southern Nevada housing market update, let's discuss some economic notes and what we are looking to see this week in terms of economic data. Last week was a light week for economic data as investors were focused on U.S. and European central bankers. There were no surprises from the European Central Bank, or what we call the ECB, or U.S. Fed Chair Powell, however, and mortgage rates ended the week with little change. And with inflation surging to decade highs, the ECB raised interest rates by a massive 75 basis points to the highest level since 2011. The latest reading showed inflation in the Eurozone at an annual rate above 9%, far above the target level of the ECB of 2%. Where else have we heard a 2% rate for inflation? Oh, that's right, the Fed here in the United States. ECB Chief Lagarde explained that the increase in rates was necessary because inflation is likely to stay above the target for an extended period. Investors are expecting an additional 50 basis point rate hikes at the next two meetings. Keep in mind that the ECB Europe had negative rates and now they finally turned positive, whereas ours had been positive for quite some time. So it'll be really interesting to see how that plays out. Last Thursday, Fed Chair Powell repeated that he is strongly committed to fighting inflation. He emphasized the importance of reducing inflation before the public starts to view higher levels as normal and makes future plans based on it. Now, that's really interesting. Before the public starts to view higher levels as normal, does that mean they're trying to condition us for these new prices forever? I don't know, but that was really interesting language that was used. According to Powell, Fed officials hope that higher rates will bring the strong labor market back into better balance to reduce outsized wage increases and lessen inflationary pressures. Investors are anticipating a 75 basis point rate hike at the next meeting on September 21st. The most significant economic report released last week from the Institute of Supply Management, or ISM, provided additional evidence that consumers are shifting their spending from goods to services. The National Services Sector Index rose to 56.9, which was stronger than expected. Levels above 50 indicate that the sector is expanding. Going forward, investors are hoping for more specific Fed guidance on the pace of future rate hikes and bond portfolio reduction. The Consumer Price Index will be released on Tuesday, and CPI is a widely followed monthly inflation indicator that looks at the price changes for a broad range of goods and services. Retail sales will be released on Thursday. Since consumer spending accounts for over 2/3 of the United States economic activity, the retail sales data is a key measure of the health of the economy. Import prices will also come out on Thursday. On this week's calendar, we have the CPI report on Tuesday, the PPI report on Wednesday, and the retail sales and import prices on Thursday. So make sure you guys go and watch Chuck Barone's daily show and get your daily dose with Chuck. He's phenomenal. He gives the market reports like nobody else, no bull and no fluff, and he will be talking about these reports all week long. So I'll leave a link in the description to Chuck's channel. Make sure you guys go watch him, subscribe him, watch his stuff, 10-15 minutes every day. Great information, great wisdom that you can use, okay? Now, every week we look at the yield curves, which remain inverted, although the 2-year and the 10-year spread, it's starting to tighten. The 30-year sits at 3.524%. The 10-year is sitting at 3.375%. The 5-year is higher than the 10 at 3.47%, and the 2-year higher than the 30, 10, and 5 at 3.582%, all up from last week's readings. All right, so moving in, and let's talk about the local market update for my market, which is Southern Nevada. That includes all of Clark County, which includes the cities of Las Vegas, North Las Vegas, Henderson, and Boulder City. So sales are down, housing availability is up. Southern Nevada has seen fewer home sales and rising inventory this year amid higher mortgage rates. For August of 2022, Southern Nevada saw 2,002 sales with 7,997 listings without offers. The official median prices for August 2022 for single families were $450,000. We have seen no median change for September as median prices are still showing $450,000, but that is down from our May peak of $482,000. If you remember, $482,000 was our median in May where it peaked, $480,000 in June, 465 in July, 450 in August. We were seeing $15,000 decreases each month for median prices. So I guess it's safe to assume we could finish the month around 435. Earlier in the month, we were showing that the median had dropped, but some more homes have sold, showing that median to 450. We will know at the end of the month what those numbers actually are. Official median prices for condos for August was $232,000, and currently for September, they're showing down to $225,500, a difference of $6,500. Median prices for townhomes in Clark County were $325,000 for August and are currently sitting at $314,500 for the month of September. That is a decline of $10,500. But keep in mind, most properties, they close and record at the end of the month, so we will always have that data for you at the beginning of the following month. So in Clark County, the past 26 weeks have seen an increase of residential resale inventory available on the open market. This week, however, shows an increase of only 7 more residential resale properties on the market compared to 1 week ago, a sign that inventory may be peaking. The week before that saw an increase of only 18 properties on the resale market, which is further confirmation that the inventory is beginning to peak. However, sales were down this week for a total of 481 closed properties the past 7 days, with a total of 11,127 properties available on the market. And when I say properties available on the market, that includes single-family homes, townhomes, condos, high-rises, and multifamilies, as well as manufactured housing, not just townhomes, condos, and single families. We include all of it, everything except rentals and parcels of land, okay? And speaking of parcels of land, our market is currently sitting with 2,618 parcels of land without an offer, and there are 3,111 rentals available on the market. The current absorption rate for Southern Nevada market the past 4 weeks is 21.01%. That's down 0.78 of a percentage point from last week's absorption rate. This marks the first decrease in the absorption rate after last week's increase, which prior to that saw 10 consecutive weeks of decline prior to the September 5th market update. And a market with an absorption rate at or above 20%, that's typically called a seller's market, which we, based on the data, still are, whereas an absorption rate below 15% signals a buyer's market. Now, to sum up this week's market report is that the Northeast and the Midwest communities, they're seeing hot markets continue where home affordability is stable. New home construction inventory way up at 10.8% months of inventory at the current sales pace. This is why builders are offering crazy incentives for people to move into those properties. Forbearance on mortgage loans continue to decline. U.S. homeownership rate rose in the second quarter. This week, we're going to have CPI, PPI, retail sales, and import price reports for the week. Yield curves remain inverted, although the 2 and 10-year spread is tightening. And in Clark County, Nevada, sales are down and availability is up as interest rates are hovering around 6%. So thank you guys for listening to the market report today. Make sure you subscribe and like this channel if you find this content useful. If you don't find it useful, if you don't like it, go unsubscribe, whatever. I'm here for the people that want to know the knowledge, know what's going on. I'm here to share that with you. If you're looking for an agent in Las Vegas or Southern Nevada, reach out to me. I'd love to help you. Our team would love to help you. The market is shifting, and I think there's going to be some opportunities here to get back in the market here in the near future, and you want to be keeping that powder dry and your credit clean because you're not going to want to miss this opportunity because the hedge funds are already putting billions and billions of dollars aside to buy residential real estate once they're ready to jump back in. And I believe, in my opinion, they're going to jump back in when the average buyer, the retail buyer, starts jumping back into the market, stops making offers. That's when Wall Street's going to come in because they don't want to compete against themselves. They have to have retail buyers in there. They're going to compete with those retail buyers and drive those prices up again. So if you're not ready for when that happens, you're not going to be able to take advantage of that opportunity. So don't miss that opportunity. I'm here to help. Go to my website, jordandove.com. You can schedule an appointment with me. We could do a Zoom video. You can come to our office. We could do a phone call. Let's talk about your real estate portfolio, your goals. Let's set up a plan for you, and let's get the ball rolling, okay? So take care, be well. Until next time, I'm out.